Legal disclaimer. Bespoke Group investment advisory services are offered only through Bespoke Advisory, an SEC-registered investment advisor. Everything we share here is just for information and education. It's not investment, legal, or tax advice. Bespoke does not offer or solicit investment services to the general public. And as always, investing comes with risk, including the possible loss of principal. Okay, so today I'm with Ali Marchand. Did I say your last name right?
You did. Good job.
Marchand. Marchand. Is that French?
It is French.
Wow, you're French.
My dad's family from generations and generations ago settled in like Louisiana, Mississippi, the French part of the US. So
Oh,
French
cool.
descendants.
Okay. So I'm with Ali, and Ali, I was hoping you could first kind of describe what you do with Bespoke, because like your official title is a senior client relationship manager. So you're super forward or client facing, and you work really closely with our clients. But you're also known on the team as really uh, a big voice surrounding impact investing. So can you kind of explain that? Because I mean, when I wanted to introduce you, I was like, Ali's our impact investing specialist, but that's not your title. So can you kind of break that down a little?
Yeah, I mean, technically, like you said, my day-to-day is working with clients and helping them with whatever they need to do. And usually that looks like onboarding help, helping with getting the banking set up, help implementing the strategies or the structures that we've planned for them, and then help monitoring ongoing activities. But on the other side, yeah, I mean, I have been in the adjacent to the sustainable investing world for almost a decade now, and I've seen it grow, I've seen it turn, I've seen it step backward, and I feel like it's an exciting space to be in because I think it's very quickly evolving and we're getting new kind of clarity on what is possible and what is not possible. So I don't know if I would call myself the expert, but it is definitely a big interest of mine, and I love helping our clients hone in on their values and how to express that through their structures, their investments, their philanthropy, and whatever else that means.
Yeah, I hope that our combo can shed some light on how, not only you, but we at Bespoke define and source truly impactful investments. And maybe we can just start by talking about the word impact, something that I've just heard the team talk about in the way that we talk about impact, which I thought was really cool. Is the first time I heard it was that regardless of, I mean, and it's the first part of your white paper, which will be linked on this episode for those if they want to read Ali's white paper. But the first thing you say is everything we do has an impact, and every dollar spent or has an impact. So this idea of like impact investing, a word only meaning like positive impact, like that's right? That's a qualifier, but there's going to be impact regardless. So this idea that have as much control or intention behind your impact because it's going to happen one way or the other.
Yeah, I mean, I think that's something that I've had to learn in this space. When I first became interested in sustainable finance or sustainable investing, ESG, values based impact. There are so many terms that you can call it. I think I was very naive in thinking. So, one of my values is sustainability in the environment and making sure our environment lasts through generations because that's just something that I see as tangible that we can actually help like change in our lifetime. And so when I first started researching about impact investments, I was all in on like renewable energy and, making everything count in terms of corporate sustainability and green bonds and all of these things. And I had to learn over the years that there is no such thing as 100% good, 100% bad. Life exists in the in between, in these gray areas. And that's the same for impact investing. You can have a solar company that is doing great things for renewable energy, and then their labor laws or, where they're mining can be not great at all. So the question really is
You mean like
like,
impacts on human rights, or you're saying that there
yeah,
could just
on
be other,
human
yeah,
rights,
sure.
on child labor laws, on just the politics and what's going on inside that country, if they're exploiting the locals. Like, there's so many things that go into impact. And like you mentioned, there's good impact, there's bad impact, but everything we do, we say, we buy, we invest in has some sort of impact. And I think what's really great about Bespoke is that we meet you where you are and we try to give you as much information as possible, and we try to be realistic, and we just have discussions with the client, like, is this something that's okay with you? Is this something that you want to do more of? Is this not okay with you? Should we not even invest in equities because it's a lot harder to control the impact that happens there? Should we be more direct? Should we, be in private credit? Should we actually give money into the hands of the people doing the work? Like, there's so many different ways to have impact with your money. So I think that's something that I would love for more people to know about when they step into the space.
So why don't we explore that a little bit? Can we explore this notion that, I mean, every client comes with a different circumstances, different things that they care about, different beliefs. And I think that there is a learning curve, right? When it comes to like you're talking about kind of like there's the reality, there's the good, there's the bad, there's the ideas, and then there's like the reality. It's kind of um, a give and take, I think. But I think that there are a couple cases that I've heard you talk about before that I think are interesting, right? Where somebody will come in and be like, think that they don't care at all about impact, but then it turns out that maybe they do. And then there's folks who come in thinking that they only care about impact and literally don't need one single return. And then they, find out that they do. So can you kind of explore maybe a couple of those pockets of like those specific
Yeah.
learning curves?
Yeah. I think what I'd like to mention before I tackle those two examples specifically is that I'd like people to imagine impact as a spectrum. And there are different ways that you can try to manipulate the impact and try to reflect it in your investments. And our investments are truly an extension of us. And I think that your values, whether it be environmentalism or social justice or your religion or your family, like, it's very possible to reflect whatever values you have in your world, in your life, in your investments. Of course, this is easier for clients who have much more capital, because with more capital, you get more options of what you can access in terms of investments. But going back to this spectrum, you kind of have like limited impact where you're looking at the equity space. And so that's like stocks. And truly, if you buy a stock, you're just moving money around the hands of different traders. So the direct impact that it has on a company is very minimal. You have shareholder activism, where if enough investors come together, you can actually go to shareholder meetings for companies and like vote on things that the company is asking their shareholders to vote on, which I think is a little bit more direct impact with equities. But it's hard to have that direct impact in just the equity space. So there, as you go down deep towards the deeper impact, you can have more direct impact. And this is where it gets really interesting. And you have a lot of the different space where you can explore. You have a question?
So you're measuring kind of along the spectrum is like indirect to direct.
Yeah, I would say that's accurate. Um, And, as you go along, you get different ways to explore impact. You have credit, like municipal bonds. You have private credit, where you can invest directly into, for example, regenerative agriculture or different projects. You have these kind of convertible notes that you can invest into different companies or projects. And then you have on the other side of that venture capital and private equity. So that's like really in the private space. And with that, you need to be aware of what you expect with the returns and how long your capital is locked up. And so this is something where we really need to work with clients to make to help them understand, hey, if you're really interested in something like venture capital and investing in maybe minority founders, that's great, but you won't see that money for at least 10 years. So are you okay with that? And is that in line with what you told us your goals are for your family situation, for your legacy situation, for like anything else you want to do with your capital? So it's really a full discussion on, where are you at? Do you need income? Do you need the capital short term? And how long would you like this to take? Because an example that you used was a client who came to us and said she wanted full impact and, that she didn't really care about returns. And that's great, but you can extend your impact for years or decades or generations if you handle it well and kind of help preserve and grow some of those assets and be selective about what you give and where you invest and things like this. So I think that is another discussion as to sometimes full impact can last longer if you do care a little bit about returns or growing the assets. So that's a conversation that we had that was really interesting.
Yeah, I never thought about it like that. Okay, and then what about, in the case where someone says that they don't care about impact?
I
I mean,
think
that's
a
an
lot of
interesting one, right? Because we've started this conversation saying whether you care about it or not, it's happening. So, like, what kind do you want to, well, at least what kind do you want to have?
yeah, and someone could say like I literally don't care. And usually that conversation is more like I don't care about impact because I want full growth. Like I want as much growth of the assets as possible. And usually people like are like, okay, so that takes away impact.
Okay, so let's get into this misconception a little bit, right? Because then there's an idea that if you um are interested in impact investing or this world of impact investing means that you're not going to grow or see returns. So, can you pull that apart a bit?
Yeah, I think it also has to do with this spectrum, right? The equity space is very liquid. And if you're investing in the right things, it's, an easy way to see your money grow. And it's consistent like over decades. So I think when people think impact is no returns or giving up returns, they think impactful companies aren't as good as not as companies who aren't worried about
They're
it.
not going to perform as well.
Yeah. Which in and of itself is kind of weird because the word sustainability means long lasting. So I always thought that was weird that people thought sustainable companies were worse off, were worse investments than not sustainable companies because I'm like, the very word sustainable means like they want to be around for the long term. But when you talk about the equity space, like a lot about what we talk about are these general purpose technologies. And I don't think in that area you're necessarily giving up return if you want to kind of gear your portfolio one way or the other. But like I said, the equity space is kind of more shallow impact. So if you're someone who wants to stay within the equity space and you want to say like I want it slightly this way, or I don't care about impact, or I want to make sure I don't invest in like tobacco companies or big oil or something like this, I don't think that there's much fluctuation in returns if you're doing things right. And we have a brilliant chief investment officer. So he'll make sure you're getting the returns no matter how he skews your portfolio. Thanks, Rob. Don't want to overpromise anything though for you. But as you talk about deeper impact, there could be some quote unquote loss of returns. But I want to be very careful saying that because in like a normal portfolio that an average advisor would recommend for like, I don't know, a 50-year-old guy, likely there would be some fixed income in that. So bonds. And you can very well invest in bonds that have more impact than just your, regular bonds that have the same interest rate, the same rate of return. So it's kind of a tricky conversation and one that we really have to understand the goals and where the client's at in their journey and And if they mean no impact, is that just because you want to maximize returns? And that means maybe in your investments, you're not going to like skew it any which way, but maybe with your philanthropy, you do, because that's also a topic of conversation we have with clients. So the coming to us saying no impact, no values, for me doesn't make sense because we all have them, whether we like it or not. And when you talk about your estate and your legacy, very often we find that even if at the beginning of the conversation, it's like, I don't want values reflected or impact considered, towards the middle or the end of the conversation, we're kind of talking about values and impact anyway. So,
So talk to me about, I think what we're starting to talk about is wealth stewardship. And I've been enjoying talking to the greater team about how, the different pieces that go into this larger umbrella of wealth stewardship. And there's philanthropy and there's impact investing and then there's innovation, which is part of that. And all of these are related, which is really exciting about the work at Bespoke because none of them are kind of happening in a silo. It's like they can work together, which is something that is super unique. So yeah, can you talk to me a bit about wealth stewardship and maybe get into more of kind of the purpose and values side of things? And I'm throwing another kind of piece into this, which we can talk about separately, or maybe we can talk. I think it could be nice to talk about within this context. I'll leave that up to you, but it's just this great wealth transfer that's happening and how, this $80 trillion of wealth that's transferring into the hands of young people and women, millennials, Gen Z, Gen X, like just, and I think there's a different way of being in the world with these generations as opposed to kind of the traditional wealth holders and the wealth builders. So maybe that's part of the conversation. I don't know. I'll kind of let you choose how you want to peel that onion.
yeah. So the idea of being a steward of your wealth, I first heard from a client and I had never thought about it like that. I have, I 100% related with it immediately because I think the idea of impact or values based investing kind of signifies that you want to be a steward of your wealth, that you want to use it for not the greater good, but you want to control and be meaningful with where you invest. Or this can also be where you buy your clothes or your groceries. Like you can be a steward of your wealth in many different ways. But when it comes to kind of, especially a family with a lot of wealth, the idea that they want to be a steward of that wealth is so fascinating and important. And I'm so amazed with these clients because I'm you have all of this wealth that could do really great things and really big things. And I think what we hear often is that these people who have this big wealth are kind of wealth hoarders or, they can never get enough. And I find that our clients are kind of the opposite of wealth hoarders, at least the ones that I know. And I think being a steward of wealth is the opposite idea of like being a hoarder of wealth. And so it's just this idea of being so intentional and meaningful of where you donate, like where your philanthropy dollars go. Your philanthropy to our clients is not just tax write-offs. They are so intentional and thoughtful about where they want that money to go. And I speak weekly with donor advised funds, which we work with a lot with clients who are working with many, many different donors, and then they help facilitate grants to philanthropic organizations. And they've told me like many times that a lot of donors will just donate their money and leave it in this fund or in this short-term pool of investments for years and not donate to anything and not use it. And so they have this limit, this minimum amount that you have to have used or donated in a year to keep things running because that's what they're meant to do. They're supposed to give money to organizations and like donate to philanthropic organizations. And our clients are the opposite. I mean, they put money in there for a reason. They already have a thought on like what the strategy will be or who it's going to go to or what the goal is of that money. And then we donate. And the donor advised funds that we work with are always so impressed with how thoughtful our clients are with those funds. So I think that's a true steward of wealth, of just like knowing and being so intentional with every single bit of your wealth.
Can you give an example of, I don't know, I'm listening to you talk about how you're speaking about clients who are super intentional about what they want to do with their donations, for example. But we also just talked about how, like, at times coming to that place of what your purpose is or what your values are, or how you want your money to um, reflect those values is a journey. So, do you want to talk about that process a little bit?
I think it's a process, and that's why we don't work with clients on like a one-off basis. We're not like, okay, here are your structures, good luck with everything. And we don't, contact them once a year and give them an investment portfolio statement and say things are fine, like no need to ask any questions here. Like we are the opposite. We like to be on that journey, and we like to help clients arrive at destinations that maybe they didn't even know they wanted to go there, but like it was underneath their goals. It just wasn't very well articulated. And so that looks like sitting down, talking about what wealth means to them, whether or not they have kids or a family or a legacy that they want to leave. And something that's been coming up in conversation a lot, at least for prospects that been talking to, is if you have kids or if you don't have kids, you can't take money with you when you die. So what do you want it to do? Like why is it important that you accumulate all this wealth during this lifetime? I think it's a question that not a lot of people think about, at least not a lot of young people or people that I've spoken with. But it's such an interesting point because, like, I was talking to this man who doesn't have kids and who has accumulated a bit of wealth in his life. And he's like, I just want to make sure that when I pass away, like my money goes somewhere to causes that I believed in. And I don't want it just to go to like randomly to a government or like randomly to a philanthropic organization that won't really achieve anything. And it's very intransparent where the money is going. So I think that's a really interesting question and way to frame our conversations. And just even if you do have kids, like you can't take it with you. So discussing with your kids, like making sure that the values of the family are seen and passed through generations instead of just having these kids who don't have any awareness of the work or the hard work or the values or, the what all of this meant through generations. So I think that's a really important part of our work, and educating and bringing the next generation into conversations. Like I think that's a really important aspect of what we do.
Yeah, this idea of transferring meaning. And you pointed something out that has been coming up in my other conversations, because I don't know, I've been just thinking to myself, like, a lot of times when we talk about what we do, we talk about it in the context of families, but there are going to be more and more wealthy people and people receiving wealth, making wealth, building wealth that are not family oriented. I don't mean that they don't maybe care about their family, and maybe they have siblings, but that they don't want to maybe have children of their own or create their own family unit. And so, but that doesn't mean that there isn't a conversation there about the meaning behind that wealth and, yeah, what it's going to do beyond when we're gone, which is something not a lot of people want to talk about. And even it's funny.
It's
Yeah,
weird to think about, right? But I think that's being a steward, a true steward of wealth is like, that's amazing how much you've accomplished in this lifetime and you will accomplish. What does it mean? Like put it into context of like in the grand scheme of things. What goal do you really want to, where do you want to help push the needle? And
yeah.
that's interesting because we had one client who is very impact oriented and wanted to make an impact in a lot of different areas. And the work that we did was we're like, you have a lot of power to move the needle, but it would probably be best used if it all went towards like one
Yeah, I
cause
was
or
gonna
one
ask you,
set
do
of
you think that
values.
from your experience, like, yeah, I was gonna ask. Sorry, I totally cut you off. You probably would have already answered it. But like this idea of, do you find that it's more impactful to like sprinkle into if somebody cares about a lot of things, or to get super laser focused and
I think it's a good, as again, it's a conversation, but I think it's good if you have the conversation first, being aware of your values or being aware of just what matters to you. And two, if you want to talk about making a difference and moving the needle, whatever that means in whatever area you want to see, there is something to say about going deep rather than going shallow and like putting more into one bucket instead of spreading it out all over a lot of buckets. That doesn't mean though, it can be a very like broad value or topic that you're interested in. I don't think that we
Right.
need to get like too specific, but I do
Yeah.
think like furthering a cause. And I just want to mention here that I'm a big believer that everything is intersectional. Like, I think intersectional feminism, like blending feminism with environmentalism, because it all connects and we're
Interesting.
all connected. I'm a big believer in that. So I don't necessarily think if you pick one cause that it won't help advance your other causes. Or if you don't want to pick one and you want to do like two, that it won't then have a big impact anyway. Because I personally believe all of this is very connected. And the UN created these 17 sustainable development goals for 2030. They want to help stop the ocean from rising and the temperatures from rising. They want to help racial justice. They want to help women's rights. They want to help like all of these things. And they're all interconnected. Like if you help one, sometimes you're helping more. Like educating women is actually a great way to help stop climate change. And you're like, so that's what
Interesting.
I like that.
Oh, wow. Interesting. I never thought about that, but I guess I'm not surprised to hear it because, again, as I've been on this journey and speaking with everybody and exploring what we do more and more, it's like we are so this, and it's what I love about this company is like we are so multidisciplinary. It's just cool to see, like, when I talk to different members on this team, how common themes come up and, like, are personal to each person. So that's actually really
Interesting.
exciting for me.
I love
Okay, so I wanna talk to you there's a couple more things I wanna talk to you about.
I want to talk about the Great Wealth Transfer. I
Let's talk
haven't
about
I forgot.
yeah, let's talk about that. I also so yeah, let's go ahead.
Okay. It's one of my favorite topics. I've been talking about it since I literally remember seeing a headline in Forbes when I was sitting at my desk the first or second year after I moved to Switzerland, and I was working for a wealth management company, and I would read like a lot of articles because I was just in this like I'm going to learn everything as much as and fast as possible. So I would be at my desk like reading Bloomberg and Forbes and Fast Company and like everything I could get my hands on. And I vividly remember reading an article about the great wealth transfer. And I was like, that's interesting. And it was at the same point that I started kind of seeing these sustainable investments and ESG things around Bloomberg. And that's when I started kind of dipping my toe in the water. And shocker, they all connect because so what's happening is the baby boomer generation, the biggest generation who has accumulated a bunch of wealth, they are in a phase where they're passing away. And so the wealth is going from the hands of baby boomer men to baby boomer women, and more women are receiving the wealth because women live longer. So it just happens to be that's the way that it flows. And then Gen X is receiving this money, then millennials, and then later on Gen Z will receive it. And there have been many statistics that say when the money is passed on from the baby boomers, either to Gen X or millennials, they will immediately fire their financial advisor. They're like, yeah, I don't relate with you. I don't know really what you're doing. And
Yeah, and,
I
like, the
think it's
experience of the world is just so different and, like,
so different.
expectations, yeah.
I we used to be very limited in what we could learn about and know. And the information that we were able to access was you had to go to a library or you had to ask a professional or you had to like commit to it if you wanted to know
Yeah, it
about it,
was
which
much
is why,
harder to get information.
yes, now it's super easy. And I think that Wall Street kind of grew in a time where they thrived on being this black box of information where they were just like, oh no, you don't need to understand anything about what happens here. Like, don't worry, we've got your finances in check. We'll just like give you a little ring once a year, show you a financial statement, you'll be good. Like, okay. And
Yeah.
so now that we all have the internet at the touch of our fingertips on our phone, on the computer, like literally everywhere, everyone is looking things up and asking smarter questions and is able to kind of see more transparently what the world has to offer. And when they
Wow.
come with questions, especially about like sustainability or impact, or like, even when they come to conversations with like old Wall Street financial advisors, and you come with, maybe your brother, and they only speak to the man in the room and don't speak to the woman, whether it's the mother or the sister or whatnot. And I still hear stories about this is still happening, which
Do
is
you really?
crazy to think. Yes, I hear stories all the time where like people will go into a room and it will be a mother and a son, and the financial advisor will speak to the son and not
Wow.
the mother, and it's just like wild. So and then people are asking about, um, investing outside of the US, or maybe they're moving outside of the US, or they have an international family, or they want more asset protection. And there's all of these layers of what how we work and how we optimize and what is possible now with wealth. And I don't think these older financial advisors, their go-to answer is just like, we wouldn't recommend. And then people are like looking up on the internet and they're like, wait, but this seems to be the smart thing for me. Or I can do impact investing and have a return, or I can do this. This is possible. And I think it's a beautiful thing to see. So I think a real shakeup is happening in the financial space right now, which I
Wow.
think is great.
Yeah, I think you're talking about more, there's just more of an awareness, um, and education that's happening for lay people or people who historically just wouldn't even have any level of access to um, these topics. There's also an interesting point about this, which is that, and we've talked about this before, but it's coming to mind, and it's that how exclusive the language is, and that can also make it impossible, because even if you were in a position where you were able to have a conversation, like, you just simply it's simply another language. Um, and I love how here I have been able to be like, wait, okay, can you like say this in a way? And then it's like, oh, wait, I actually do understand. This makes a lot of sense when you just say it in a different way.
Yeah. I mean, what
Yeah.
you just brought up is also a really good point and something that I love to talk about. And that's why I'm sure we've talked about it before. But I think that there's a lot of lack of education and transparency in the financial industry. So, and when people, especially like women are known not to invest as much as men. It's because men, I don't know, the industry was built by men for men. There's maybe women, we also like to know things, like we like to have things really well known and well researched before we start doing something. And especially for something like investing, when you feel like you're letting go of your money, can be a little scary, especially if the space is confusing. But there's a lot of confusing words like risk appetite. If somebody came to me and was like, what's your risk appetite for your money? I'd be like, Not a lot."
Yeah.
But then if you say you don't want risky assets, sometimes that excludes you from something as basic as equities, or like they invest in like more conservative equities, or bonds and things. And if you're a young woman, like you can afford to take on that risk. So I like to explain what risk means in the industry. And also, it so depends on your age and your lifestyle and what you're trying to accomplish. And are you in like a period of growth or asset protection, or it's so dependent, but nobody explains these things. So people are going to tell women and writing articles saying women are less or more risk averse when it comes to investing. I'm like, maybe if you could explain it better, then you would
Yeah.
understand that we're actually not more risk averse.
Okay. So is there anything else on this wealth transfer that you want to hit?
I think it's something that's really interesting is that when people think of the wealth transfer, at least I used to think of it as just like a ton of money, like dollars changing hands. And that's not actually what's happening. The
Oh.
wealth is coming in the form of investments, like investment portfolios. It's
Oh.
coming in the form of companies. It's coming in the form of real estate. It's coming in the form of small LLCs, medium sized companies, big corporations. Like, when you think about the wealth transfer, it's not only, like dollars changing hands, it's actual like assets changing hands. And I think that's interesting also because as companies change hands, either, they don't last and the next generation doesn't. We have a record amount of small and medium-sized businesses either for sale right now or are just being forgotten about because it's not something that the family either discussed or that anybody wants to take on. But you also get like new leadership and new ideas. And this new generation has a new way of leading and communicating and building. So I think that that piece of it is very interesting as well, because it's not only how wealth is being managed, but also how companies are being managed.
Whoa, you just blew my mind. Haven't thought about that. Okay, somebody can inherit a portfolio, somebody can inherit this, and then there's also folks who, have spent their life, like, curating and building this, and it's a reflection of their there's more of an attachment, it's more of a reflection of their identity or tied up in that way. So I guess those are two separate examples, but can you talk to me a bit about, like, the flexibility? I guess I have several questions. Like, one question would be in the case of, um, when someone inherits the portfolio, like, are there options there to change things? That's number 1. And then number 2, when someone is coming with a portfolio that, they put their blood, sweat, and tears into and they love, but maybe know that there needs to be a change. Like, can you talk to me about that process? Because I think that can be a tough one.
Yeah, I think both are good questions. For someone inheriting a portfolio, yes, you can change it. Of course, you have to think about tax implications and capital gains and things like that. But that's something that our team is really thoughtful about. And it's usually not the case where you see a portfolio and then you sell everything one day to the next and then like invest everything. It's like you look for opportunities to sell or opportunities to buy and like ease into it. But absolutely, you do not have to stay with the portfolio that you inherited. And there's always ways to change it. And I think that bleeds into your next question, where it's really interesting because the season of life where you are, it doesn't last forever. And so if you were in a season of life where you were, head to the ground, investing everything in one asset class or like your business or whatever, and then that's changed or your goals start, your priorities start to shift, it can be important for your portfolio and your investments to come with you in that shift. And it's something I get a lot of pushback on this when I talk about it on social media, because I think a lot of the financial education being talked about online is like for the first time investor and for the basic investor. And it's very important to know that that's not the right tips or, way to go about things for everybody. So, like, I hear a lot about maybe maybe you should just invest in an ETF for the rest of your life and or a mutual fund. And like, that's that. But as you, especially like these people who took really big risk in investing everything, let's say in Bitcoin, and then they have this issue later on where they have all of their assets invested in an asset class that doesn't provide any income. So, we have to solve for paying bills or solve for buying real estate or solve for sending kids to college. Like, it's very real that seasons of life change. So, in terms of like what how to go about seeing what you need to change or how to talk about a client with a client, it's very important that it's just like a two-way conversation, that you're listening to the client on their needs. If they're telling you, it's something that I've been grappling with, like, I have a lot of bills, but my asset is great, it's growing, but I don't want to sell, but I don't know kind of how to match my lifestyle with this. Then it's a deeper conversation of like, what are your goals? Are your investments matched and aligned with that? And where do you want to be in 10 years? And how are we going to gradually get you there so that we can be realistic? We can listen to your wants and needs, but you can also meet us where, or not meet us, but meet yourself where you need to be. And maybe you do need to sell off some of that asset class. Maybe you do need to like find a more income generating way to invest your money. So it's always a conversation. It is hard, especially for someone who like put their blood, sweat, and tears into building up to that point. But it's just about education and communication and meeting someone where they are.
Yeah, and I think also, like, the pace, right? Like, it's not necessarily a flip of a switch. It can be it's a process. I was gonna ask you about, just I know that you're personally passionate about connecting to wealth owners, no matter the size of wealth, and just like educating people about the financial industry, educate people about investing. I know that's something that you're personally passionate about, so I wanted to um, give you some time to talk about that. And I think it also fits into what I was going to ask you, which was about how there are there are levels to wealth, right? So can you kind of talk through like the the different support for different levels of wealth, and then also just generally speaking, like I know that you also make videos because you just again are passionate about like people just having access to this information. So it's also like about knowing like what information is for you. And so I imagine that there are people who could be listening to this podcast who might have $5 million and some might have $500 million. So what would you say to kind of both of those audiences?
I think when you're first starting your investment journey, so let's talk about under 1 million. It's really important that you get your toes in the water. You dip your toes and you start somewhere. It's like starting any new thing, and especially I've already mentioned with money that you've earned, like it feels like you're giving it away
I
and
know,
like you
even
will
me,
never.
Ali, I'm like, I can't, I've dipped my toes, I've started and then I stop and then I pull it back and then I get, yeah. So
It's a
I
muscle.
relate.
It's a muscle. It's muscle memory. And so like it's so important. And I know new investors like to invest money and then they like to just stare at their phone and like panic
Yeah.
when it goes red and then like jump for joy when it goes green. And I know that it feels like this, but you got to take the emotions out of investing. I'm going to say something right now. Like statistics show that the average investor, like yourself, are no worse off than some of the best hedge fund managers and traders in Wall Street. Like you end up with the same amount of returns, if not like the one who knows less ends up with more returns, because
Interesting.
what ends up happening is that consistency wins over anything. And if you're consistent and not emotional about it,
Mm,
historically, I'm not saying in the future it's always going to be like this, but historically that has been the best strategy. And statistics have also shown that women are actually known to be better investors than men because we are actually less emotional with something. Like once a woman understands that it needs to be consistent, like monthly investing 10% of their income in an ETF or a mutual fund, and they just do this for years and years and years and years, and they don't look at it, and even when the market's plummeting, like they don't freak out, they just stay steady. The statistics show that women are actually like the less emotional investors.
interesting. I love that.
Interesting.
I'm curious like how the approach is different from like 50 million to 500 million and like what impact can look like or means for both of those parties.
I think for someone with 50 million versus 500 million, 50 million is a significant amount of wealth. The complexity isn't as high as someone with 500 million. And I think that's something that we've had to also help clients realize is that, fortunately or unfortunately, a lot of wealth comes with a little bit more complexity. And that just is in terms of protecting it, keeping yourself private and not a target, in terms of planning for legacy and your kids and your whole family, in terms of philanthropy. Like philanthropy for 50 million and 500 million is going to look vastly different. Probably someone with 500 million could afford to give away and probably would be fine with giving away a whole lot more than someone with 50 million. And then just like the structures in and of themselves, there's so much you can do when it comes to wealth strategy and planning and optimizing. And I think with someone with 500 million, there is much more that needs to or could be done versus someone with 50 million, which might need a bit of a more simple structure.
Yeah, can you talk about the transparency part a little bit? That's something that we didn't get to, but I know that we've talked about before, which is that there is not an organization that like we're not like pushing like
No,
right like the ideas I think a
we
lot of
don't have
time.
commission or we're not aligned or like
Yeah, like that's something
partnered
I
with
think
any of them.
that's something I think is cool to highlight because I think that's pretty unique.
Yeah, I mean, I think that is an important topic that a lot of clients ask me about. A lot of people don't even know what a fiduciary is, and Bespoke is a fiduciary,
So it's a
meaning
yeah.
meaning if you work with one of the big banks, and I won't name names because I'm nice, the big banks have incentive to keep everything within their doors. So you want a fund? Great. We've got a fund. You want a private venture? You want private equity? We've got you. You want bonds? You want this? You want this? Don't worry. It's all in-house. And then the commission goes like this, like everything in-house. You're like, you're making money. You're making money. You're making money. The client, we don't know where the fees are going. Like, it's pretty not transparent in that bank on Wall Street. So a fiduciary acts in the best interest of the client and only the client. And so if there's something that the client is not happy with, like fee structure or whatever it is, the fiduciary's responsibility is to always have the best interest of the client in mind. We do not take commission or any money, anything from banks, from partners, from VC funds, from ETFs. Like anything we do is only in the best interest of the client, and Bespoke will never be remunerated or like paid for that. So I think that's really cool.
I know, I was going to say that's definitely something to be proud of. Okay, I think that we peeled the layers of this onion, Ali.
Great questions, Claire. Thank you so much for having me.